We're
There
live.
we are. Good morning, everyone. Welcome to this week's episode of LicataLive. We're going to be talking about what it's like to be a first-time home buyer in this market, and we also have our very own Jasmine Ruby, who was a first-time home buyer this past year. So we're going to be talking about that.
We've got an event, an ongoing event that's happening right now, and that is the Orange County Toy Drive. So we would love for you to donate an unwrapped gift for a child, and those gifts are sorry. Oh my God, I'm so nervous. You can bring them to our office or to the Lake of the Woods Clubhouse or to Colwell Banker Elite anytime between now and December 4th. We would love for you to help us make Christmas really special for some kids for whom it otherwise would not be.
Yeah.
So please consider donating to that. December 4th.
And we'd be happy to pick up any donations that you're not able to drop off at one of the locations. We're happy to help with that.
Yes, happy to help with that.
Yes. So we talk a lot on the LicataLive videos about the real estate market, and we've been, all of the sources that we usually get our information from, all of the big economists, and listening to some of the predictions for 2022 and what the real estate housing, what the housing market is going to do. And from what most of them say, there's no crash expected. Houses are supposed to, they're projected that they're going to continue to appreciate, but not at the same rate that they have during 2020 and 2021.
Their average, I think they're expecting a little over 5%, right?
Yeah, mm-hmm. and it depends on which source. There's several different ones, but I think most of them are between 4 and 7% for 2022. The interest rates, I know we've talked about this a few times, but they are expecting the interest rates to start to rise, not drastically. The most recent projection we saw was they'll end up in the third and fourth quarter of 2022 right around 3.5%, maybe 3.6%. So still very low compared to historic numbers. And one thing that I was listening to this morning, they were saying that the first quarter of 2022 is expected to be very busy. People who are waiting until after the holidays, that kind of thing. And that we're going to see a little bit of an increase in inventory. The inventory shortage, of course, is what's been driving a lot of the market. And that we're expected to see a little bit of an increase, but not enough to make up for the lack of supply that we've seen. So it'll be interesting to see. One thing that we have seen in this highly competitive seller's market is that it's very difficult, especially for first-time home buyers, because first-time home buyers aren't benefiting from the rise in their own equity. They're not selling and making a lot of money off of their property and then putting it into another one. They're starting from scratch. So even though they're quickly building equity once they buy, it can be difficult for them to get into that first home.
And part of that has to do with often first-time home buyers are not familiar with credit scores, what that means, and in terms of how that really can impact their interest rate. So sometimes interest rate, depending upon the loan program, is determined by your credit score. So having a better credit score is definitely beneficial for a first-time home buyer.
Mm-hmm. There are several loan programs available that are made to help first-time home buyers. For example, FHA loans, they have a lower down payment, and that's great that they allow first-time home buyers to get into homes, but it can be a challenge in this competitive market when you're competing with people who are putting a large down payment or who are paying cash. It can make it even more challenging for a first-time home buyer. So we wanted to let Jasmine talk a little bit about her experience as a first-time home buyer. You had an FHA loan, correct?
USDA.
USDA, okay, and that's
Yeah.
another loan program similar to that allows first-time home buyers to put very little money down to get into a house. So, Jasmine, how many offers did you put in before getting into your house?
I want to say 3.
Mm-hmm.
I want to say I put 3 offers in until I finally got my house, and it was, in the end, I mean, I love where I live now, and it was perfect. Some of the other homes were, you know, a little bit further out, like Fredericksburg, and for me, it was super convenient that it was right here in Locust Grove. So I was really
sometimes, and often it is the case that things work out the way they're supposed to, but it's really hard to feel that way in the midst of it, right? Because it's frustrating. It is frustrating to be making a great offer and it still not be accepted.
Mm-hmm. Yeah, it was a little discouraging at first. I was like, oh gosh, I'm never gonna get a house. I think I had started looking. I think I was finally ready maybe January, and I got mine closed or went under contract April. And it was closed by the end of April.
Mm-hmm.
So it went really fast. I mean, it ended up going really fast. If you there's a lot more steps when you're actually the buyer that I learned that you have to do to prepare. You know, all the paperwork and document gathering that you have to give them. But if you stay on top of it and turn everything in, I was ready to close as soon as possible. And luckily the seller was in a position where she was out of the house and she was, you know, ready to close too. So it worked out for both of us.
That's great. Can you talk a little bit, Jasmine, about the pre-approval process with a lender?
Mm-hmm.
One of the things that I'd like to say is I do think it is critically important to become pre-approved, and really even to talk with a lender maybe well in advance of your considering purchasing, so that you understand what credit is, how it is compiled, and what you need to do to be able to qualify for a home.
Yeah, absolutely. I started my home buying process 2 years, maybe even 3 years before I actually bought my house. I had a lot of credit issues that I had to take care of first. Credit score wasn't the highest or the best that I knew I could get it to. I had a high debt to income ratio, which is something that they look at as well. So I had to.
What does that mean, Jasmine, debt to income ratio?
Debt to income ratio is how much debt you have, like credit cards, auto loans, anything that you owe money to somebody for, and comparing that to your income and what you bring home. So mine was a little bit out of proportion. I don't know exactly what the right ratio is. I know there's a number. There is a certain number you're supposed to stay at, and that was probably the biggest challenge for me. That's why it took me 3 years.
So that was eye-opening to understand what they look for.
Exactly.
And then was your lender able to work with you to say this is what you need to do in order to get your credit score where you want it?
Yes.
To be able to take advantage of a loan?
Yes, and that was the biggest thing for me, and that's why I reached out to a lender early, was to say, hey, what do I need? What should I pay down first? Like, what should I pay down, you know, put more money into to pay down quicker? Because they're not all equal, you know. So that's something that I learned is that not all your debt is the same. So, you know, you might have the same balance on you know, a couple different accounts and stuff, but there's one or a couple that you can pay down more of that will help your ratio out. So that was something that I worked with the lender directly with, and he I laid everything out that I had, gave him all the information. He actually did a full credit run at that time so he could get it, like the government report where you can see you get a free one every year. Didn't know that either. So you get a full free credit report from the government every year. You can do it yourself. And I pulled that, and it said all the debt that I've ever had, even I'm trying to think, what is it when you, like, you owe but you didn't pay it?
Like forgiven?
Yeah.
Debt forgiveness?
Yeah, so like that was listed on there. There was a bunch of things on there, and that all affects your score. Even if, I mean, there was like credit cards back from when I was 18 that had closed or, you know, were still open. And he went through everything with me and, you know, compared, this is how much you make every month. This is how much you need to pay on your, you know, pay on this card or pay this down. You know, save up, because I also had to save at the same time, save money, put money aside in the savings account, you know, to be able to pay for home buying expenses, like your earnest money deposit. That's cash that you have to give them.
And if you're getting a home inspection, you need money for the home inspection.
The appraisal you also pay for up front.
Yeah.
So there are some smaller costs that you do pay up front as a home buyer, but it's all part, you know, it's all part of the process of buying a home. And working with a lender that far ahead, I wouldn't probably even be where I am now if I hadn't taken those steps and just said, hey, what is this even possible for me? Like, what do I need to do so I can buy a home? Because I want to be I wanted so badly to be a homeowner and stop, you know, paying my landlord's mortgage.
Yeah, right.
I think that's great that you did that, and I think that's where a lot of people, you know, kind of miss what they should do. They wait until they feel like they're ready to buy a house, and then they contact a lender. And all of the lenders that we work with are great, and they are happy to work through that process with you, and help you through credit issues. Just like you said, Jasmine, tell you like what's more important, you know, how much money you need to save, all of that kind of stuff, because they know more than the average person, even more than we do, what affects, you know, your ability to not only get a mortgage, because there are so many different mortgage programs, and some people have in their heads that, you know, a certain kind is better than another kind, or that it's going to make their payments lower, or they don't have to, you know, put as big of a down payment. But they can really, you know, show you all the different scenarios and help you to decide which one is best for you.
One of the other important things about getting pre-qualified, and, you know, once you get to the point where your credit is great and you're able to buy a house, it's understanding how much you can qualify for. If you want to live in a home that has a homeowners association dues, if it has dues or an assessment, that goes into your qualifying as part of an expense. So you want to know that. The other thing is, it's really important for you to know, again, what you qualify for, so that you can be looking in the right range for homes. I can tell you from experience that if you just go out, like say you see a house that you like and you want to see it, but it's really above your qualifying means, then that really hurts you, because it's going to be difficult for you to really want anything less than that, because of course there was a reason why it was more expensive. So it really does not benefit you whatsoever to start looking before you know what you can qualify for. The other thing about that is, it doesn't really matter as much as what you can qualify for if you're not comfortable with that payment. You have to live within your means. And if a lender tells you you can qualify for a $1,500 payment, but you're not comfortable paying $1,500, then don't look that high, because no one else is going to be making that payment other than you. So you've got to feel good about it.
Yeah, absolutely. And it's so hard when you know, when you don't know what your budget is and you see a house that you like Pat said, and you go look at it and you love it, but then you find out that you qualify for less than that, you're going to be comparing every other house that you see to that house that you love, and you're going to be disappointed with everything.
Yeah.
And, for most of us, certainly in my case, I think most people, your first home is not it's not the house you're going to live in forever. There are certain things that, you're just going to have to give up. So you really need to, once you're pre-qualified and you have a financial plan, you're working with a lender, it's really important to, sit down with your realtor and really figure out what what are needs, what are wants, what you absolutely have to have, and then the things that are, that are nice to have or preferences, because, it's competitive enough in this market, just to get a house. But if you're setting your standards too high, you're hurting yourself.
The most important thing I think we can all agree on is it's important just to get into the market.
Yeah.
That first step of getting in is what allows you to experience the home value appreciation that we've been seeing. For example, if you bought 2 years ago, you would already have substantial equity in your home. We're expecting, as we discussed earlier, and Mary mentioned, that we're looking at least, around 5% appreciation next year is what the projections are. So if you're waiting, say for another year and you can qualify now, not only will the homes be more expensive, but interest rates are going to be a little bit higher. So while it's scary to think about purchasing a home that really isn't everything that you want, it's still honestly better for you to get in the market.
Right.
It doesn't have to be your forever home. As a matter of fact, if it's a home that you can keep forever as an investment property, as a rental down the road, then that's something that you should consider as well.
Absolutely. And I just wanted to piggyback off of both of you guys. When you were, oh gosh, I hope I didn't lose my, I had a brain fart.
It's okay.
We all have those.
I was wanting to piggyback off you guys when you were saying, talking about knowing like what you can have and what you can't have, because that plays a big part depending on the kind of loan you get too.
Mm-hmm.
That was something that I had learned, that with the particular loan, the USDA loan that I had, it only qualifies for certain amount of money for certain areas. So you can get more for your money out here in Orange County than you can, in Stafford or Fredericksburg or anything like that. That was a big deal. I didn't know that.
Mm-hmm. And the Route 3 corridor of Orange County is really growing. There's so much new construction that is slated for this area. And as a matter of fact, this might be the right time to say, we've heard from a really good source that Chick-fil-A is coming to Orange County.
Yay!
Yes, between Fredericksburg and Culpeper. So you Culpeper people coming down Route 3 to go to Fredericksburg, you're going to have a new place to stop for breakfast or lunch or dinner.
Yeah, we're really excited about that Chick-fil-A.
We are.
We are.
So Jasmine, as after going through the whole process, is there anything that you wish you had known going into it that you didn't, or that any advice you would give to someone who is starting to look for their first home?
I wish I had looked into it sooner.
Mm-hmm.
I really do. I just kind of grew up in apartments and renting. And kind of moving every year, so that was my norm, and I kind of just always thought, okay, that's kind of what I do. That's what I'm supposed to do is move around. But I had really wanted somewhere, permanent to stay and not have to worry about rent going up, or, someone selling their house because I'm, renting it, and then now they're going to sell it. So I really wanted my own place, and I wish I had looked into it sooner. I just never thought that it was a possibility, so I never considered it until I started working here and seeing like everyone, people younger than me or my age were buying houses, and I was like, maybe I can do that. So that's what finally got me to nudge me to go and talk to a lender, So it doesn't hurt. I mean, just talk to someone if that's something you're thinking about, especially if you're renting. Rent prices just.
That's right, I was
Yep.
gonna ask you to say that. Rent prices will continue to go up.
Yeah,
I
absolutely.
the most recent number I heard today, I think, was that rent prices have gone up 10%. I mean, that's a lot if you're paying $2,000, and it's just, and then I think they're projected to go up about 7%
Yes,
more
I
this year.
the same
So
thing.
it is.
And if you have a mortgage, it's gonna stay the same. Your principal and interest will remain the same. So makes more sense, really.
Yeah,
It's also a really good time to buy a rental property if that's something.
Yeah.
And before the interest rates go up, while they're still appreciating, and rents are going up. It's a good time to consider, if you've been considering, it's a great time to do that. Well, thank you so much, Jasmine.
Yeah, thanks for
Yes,
having me.
thank you, Jasmine.
And congratulations. I know you worked so hard and sacrificed so much to be able to, to do that. And I mean, obviously you're glad you did, right?
Oh my gosh,
Yeah,
absolutely.
it was worth it.
I would do it again. And I would do it sooner.
Yeah.
I wouldn't wait as long next time for sure.
Okay. So anything else? No?
Oh,
Happy
we
Thanksgiving.
gave the big news about Chick-fil-A,
Yeah.
that was an important
Huge
thing.
announcement.
Happy Thanksgiving,
Yes.
everyone.
Happy Thanksgiving.